Hey, I'm Zach.
And I'm Jesse.
And you're watching In Depth
on Now You Know.
You can help support our channel by going to ecoware.us, where you're going to find new designs every week, and we carbon offset the production, shipping, and life cycle of every product. And we plant a tree for every order, so it's carbon negative.
Brought to you by abetterrouteplanner.com. You can check out their new premium Android and Apple app, which makes it even easier to use a Better Route Planner. Use our link in the show notes down below, and you get a 30-day free trial.
And we're sponsored, as always, by our friends at the solar-powered hotels in Schaumburg, Illinois, the Fairfield Inn and Suites by Marriott, and the Town Place Suite Hotel right next door. They're both connected, they're both solar-powered, and they both have EV charging.
I saw this tweet by Popa Muscanity, and I couldn't stop laughing. He says, "Hello, Tesla Q. Tesla appears to be doing some kind of weird reverse bankruptcy. Please help me understand your thesis." And yeah, you can see there, that is sort of the reverse bankruptcy.
That's what it looks like. That's a classic reverse
bankruptcy curve. I mean, for anyone who doesn't follow stocks, this is like a classic reverse bankruptcy curve.
Yeah.
That you should really be looking out for, especially if you think that the stock is going to zero. This is one of those things you got to look out for.
Right.
Because, definitely not going to zero in that graph.
No. And as Tesla now gets to new highs in their share price, we should probably talk about some pretty exciting things that could be happening with the stock. We all are wondering what's going to happen with Q2 deliveries, because that is going to affect Q2 earnings, which could affect whether they get onto the S&P 500.
So what is the S&P 500? Because we talked about it a lot, and everyone just says, "Oh, it's the S&P 500." And you hear it on the news all the time. The S&P 500 today, blah, blah, blah. And I'm just like, I don't know what that means. What does it mean?
Well, Henry Varnum Poor was a financial analyst, and his son, Henry William Poor, they started publishing a book in the 1860s called The History of Railroads and Canals in the United States. And then their publication merged their data with the Standard Statistics Bureau data in 1941. And at that time, they were tracking 416 companies. And then in 1957, the S&P 500 was founded, and they tracked the 500 largest companies worth about $30 trillion. Now, to put that in context, because I don't think anyone knows what $30 trillion looks like, the U.S. gross domestic product is $20.5 trillion.
So wait, gross domestic product, that's GDP. So that's what the whole country makes?
Yeah, all the services and products that we make in a year.
And so the S&P represents companies worth more than the GDP of the United States.
Right. That just shows you how much value is in those 500 companies. Mm-hmm. And so today, a committee at S&P Global Incorporated decides, based on these criteria, whether you should be admitted to the S&P 500.
All right. So, I think that I want to get in the S&P 500.
Okay.
What do I need to do?
All right. Well, first thing is you have to have a market cap of $8.2 billion or more. Can you check that box off?
I could fudge the numbers a little bit. Sure.
Okay.
Okay.
Are you listed on the New York Stock Exchange or NASDAQ?
I'm sure on the form I could just write JES or something, right?
Okay. So sure. You got two out of two.
Sure,
okay.
sure. Yeah.
Are you largely doing business and headquartered in the United States?
Yes.
Okay. Boom. That's
an easy one. Yeah.
All right. Is your minimum monthly trading volume at least 250,000 shares
on YouTube?
Okay.
We're
going to count. Okay, we'll count videos.
Okay,
sure.
Yeah.
Is your minimum annual dollar value traded to float adjusted market cap greater than 1.0?
I don't know what that means.
Well, it's not.
So wait, what does that mean though?
Basically, we're just making sure that you've got enough traded shares. They don't want a company that's largely held by ownership. They need a large number of publicly traded shares. Generally, they want over 50% of the shares to be available for public trading.
Oh, so I guess I hold all the shares in me.
Right. So they're not really interested in a privately held company.
Okay. And I'm pretty private.
You are.
Aside from this YouTube show.
So that's the one thing that kept you off this list. Huh?
Dang it.
Sorry.
Okay. Right.
And then here's the big one. Mm-hmm. Here's the one that's going to be troublesome for Tesla. You need the sum of your previous 4 quarters of earnings must be positive, as well as the most recent quarter. So any one particular quarter can be negative, but the sum of the previous 4 have to be positive. Now, that's good news for Tesla, right? Because if we look at this chart here from hypercharts.co, you see that the last 4 quarters, one of them was negative, which was Q2 of 2019. They had a loss of $167 million. But the other 3 quarters were positive. They made $903 million. So here's the deal. Here's the complicated part. So if Tesla is profitable in Q2, even by $1, then boom, they've met all the requirements to get onto the S&P 500. Should be a breeze. If they're not profitable in Q2, let's say that they lose $100 million in Q2, that means they won't immediately be admitted onto the S&P 500 because their most recent quarter was not profitable.
Right. But there could be some kind of workaround. Basically, the S&P committee could get together and say, well, coronavirus, what are you going to do? Look at how well Tesla's doing compared to all the other car companies. And they could say,
sure,
we'll let Tesla in because we think if there wasn't some crazy global pandemic, which we haven't seen before, Tesla could get in. So
yeah, exactly.
That's a potential possibility.
Right. It's really hard to say because nothing like this has ever happened before. Let's go worst case. Let's say that Tesla loses $100 million in Q2, and let's say that S&P doesn't let them on.
Okay.
Then let's go to Q3. If Tesla can just be, let's say, $1 profitable in Q3, that would still fulfill the requirements.
I see. And basically, as long as the loss in Q2 wasn't over that $903 million, so that would be an enormous loss.
Right.
We are not expecting a loss that big.
No.
This quarter at all. We're expecting break even, maybe even profit.
Yeah, to be honest, as of the recording of this show, I don't think even Elon knows. We're talking super nail-biting tight here.
Sure. So basically Q3, as long as they can post a profit, that would mean that they would definitely get on the S&P 500, barring some kind of financial nightmare in Q2.
Which I feel like we've already gone through.
Exactly,
Right.
exactly.
What will this do for Tesla if they make it onto the S&P 500? And that is the big question, isn't it? What will being on the S&P 500 do for Tesla? And I think there are two big things that will happen here. One is every S&P 500 index fund will have to buy Tesla.
So, okay. I didn't know what the S&P 500 was, so I'm definitely not going to know what an S&P 500 index fund was. What is it? What is that?
Those are funds that you can invest in, like a mutual fund, where you don't have to do any of the work. The fund is automatically trading in all of those 500 shares. So they are like, okay, who's on the list this week? These 500 shares, we make sure we're invested in all of them so that Jesse doesn't have to worry about it.
I see. So if I'm lazy, which I am, and I wanted to invest in not just one company, because one company could go horribly wrong. I just want to be invested in the 500 biggest companies. It's you feel pretty safe investing in that because on the whole, Earth is doing pretty good, or at least it was until recently.
Yeah, annually they're making more than 9% a year. So, it's a pretty safe bet.
So you're just making 9% every year.
On average. There's years where it's gone down.
So so the index fund itself, I am putting money into the index fund, and then they're taking my money and just going kapoo to 500 companies.
Right.
Okay.
Which saves you a lot of time and hassle and commissions and tracking and all that stuff. Right. Okay. So it's seen as a very safe bet for many people who want to just be in very safe and secure companies that are making money.
So why does this matter for Tesla?
Well, so there's over 50 S&P 500 index funds out there. Okay. And each of those funds is worth millions, if not billions or hundreds of billions of dollars. Take the Vanguard 500 index fund. So that's valued at $300 billion.
Okay, but so what? Who cares?
Well, so if Tesla gets listed on the S&P 500, that means that they have to immediately buy enough shares of Tesla to represent Tesla on their index fund. So that means buying millions of dollars worth of Tesla shares.
Oh.
Along with all the other index funds that have to do that very, very quickly.
So basically, we're talking 50 giant index funds that have to make Tesla part of their portfolio, a meaningful part of their portfolio, all at the same time. And we know that that's going to happen?
Yep.
And this isn't insider trading?
No, because everyone knows it.
Okay. So as long as it's just...
It's a known fact.
Okay. So... That's good.
And so that's a bump that usually happens to companies as they're approaching this. People are like, oh, I think that company's going to get in the S&P 500. There's going to be a bump soon, and maybe I'll buy knowing that has to happen.
Okay. So that's good news. So maybe we will see a little bump from the index funds. What else is good about getting on the S&P 500?
Well, and I do just want to point out, Tesla only has 150 million floated shares. So there's not that many shares that you can buy anyway.
Floated shares?
Yeah, so floated shares are the number of shares that are actually kind of available for trading. Tesla has over 180 million shares, but a lot of those shares are tied up with institutional investors or investors like Elon who aren't going to let go of their shares.
Okay.
So when you only have a limited number of shares and you already know that a whole bunch of funds are going to be buying them, you already know the price is going to go.
Supply and demand.
Right.
Okay, gotcha.
But I think there's something even bigger here. Being profitable for a year and getting on the S&P 500 signals to investors around the world that Tesla is no longer some kind of startup that's just burning investors' cash.
Right. They're selling products that people want. And they figured out how to do it profitably month after month, quarter over quarter. And now, maybe even more importantly, during a worldwide pandemic.
Yeah, because let's put this in perspective. Tesla was able to increasingly sell cars during this pandemic while its competitors' sales slumped. Let's take a look at this. Ford's total vehicle sales fell in Q1 by 12.5%, and Ford's car sales, like their sedans, fell by 36%.
And what about in Q2?
Yeah, we don't have the Q2 numbers yet for Ford. They haven't been released, but all bets are that they've dropped quite a bit.
Okay.
But if you want to know about some Q2 numbers that we do have, these just came in. How about GM, Toyota, Fiat? Well, they've all slumped by more than 30% in Q2.
Whoa.
And U.S. vehicle sales were forecast to fall about 34% in the second quarter, according to Edmunds. Yet during this incredible downturn, it's looking like Tesla has been increasing sales. So if Tesla can sell more than 95,000 cars this quarter, then they will have their best Q2 ever, and yet asterisk during worldwide pandemic.
Right. And this is important because not all quarters are created equal.
Nope.
Basically, like Q1 has generally pretty poor car sales. Q3 and 4 have fantastic car sales. And that's what we see represented in Tesla's sales graphs, is that people are just more apt to buying a car near Christmas and in the middle of summer, as opposed to winter.
And then let's look at the bigger picture here. Less than 2 years ago, Elon tweeted his now famous 420 tweet. Now, what was Elon saying basically in that tweet?
He was saying that at $420 a share at the time, he was happy to take Tesla private because that's what he believed the fair value of the company was.
And by the way, that's when there was 15 million less shares outstanding. They've issued 15 million shares since that date.
So those shares were more Tesla. You were buying more Tesla with those shares.
They were more valuable, yeah. Right. They've diluted since then. So now with Tesla valued at $1,100 per share as of the recording of the show and a market cap of $207 billion, I just want to take a little pause right here to bask in the glory of what we're talking about here, okay? The market.
You keep saying the market. Who is this Mark Kett guy?
Oh, no, I'm sorry. The market, the worldwide market, the people of the world.
So it's not just one person.
Nope.
This is the market. When capitalism is talking about the market,
right,
and people are like, well, don't blame me. It's the market. That's what they mean.
Right.
Okay.
People around the world are valuing Tesla more than Toyota, more than Exxon. As of today, Tesla is the 22nd most valuable company in the world.
Right. And that's not according to us.
No.
That's not what we're saying. That's what the market is saying. And again, well, hey, that's the market. You can't blame me.
I just want to pause here because when we started this show 4 years ago, if we had said that on the air, I think most of you would have said, okay, these two people are lunatics and there's no reason to even watch them because they're crazy and they don't know what they're talking about.
Right.
If we had said at that time, 4 years from today, I think it'll be the 22nd most valuable company on earth.
It'll be valued more than Exxon and Toyota.
Yeah.
People would have been spitting out their coffee. They would have been writing us emails, sending us death threats, and saying you're crazy.
When we were at Fully Charged Live and we said that in probably, 8 years or something, some of the biggest companies in auto like Ford and GM will probably be out of business. A lot of people did a spit take then too.
Right. And it wasn't until just after that Tesla went up, hit almost 1,000, and people actually were like, whoa, this is pretty crazy. And now with it being up at 1,100, I mean, it's practically worth 3 times what Elon was willing to pay to make it private again.
And let's remember, people laughed at him when he said 420.
They thought that was crazy, and people were like, great, I'm going to buy the stock at whatever it was at, like 300, and then when they buy it for 420, I'm going to make such a big profit.
Right.
And those people, if they kept holding on to their shares, are pretty close to quadrupling their money.
Right.
Which is insane.
Yeah.
Okay, but let's aside from market cap, let's get back to what this means.
Yeah, I mean, with Tesla at this valuation, it means that Elon can issue more shares to fund more Giga or Terra factories. And that, to me, is game, set, match for the competition. Because what was stopping Tesla before?
Well, I mean, if you believe the shorts, it was the demand.
Yeah, the conjecture all along has been there's no demand for their products.
And yet, there is.
Right. What's stopping Tesla is their production limited. Whatever they can produce is what they can sell. Mm-hmm. The demand is there. The demand is real. Tesla is production limited. So now Tesla can turn on the taps and continue building out factories at an increased rate all around the world. Because let's talk about exponential growth. We talk about that a lot on this channel, what it looks like on a chart. I would argue from the data that Tesla has been building gigafactories already, that they are building at an exponential rate.
But how many gigafactories are there in the world?
There's only 6 data points, right? There's the original Fremont factory, which we'll call a gigafactory for all intents and purposes. There's Gigafactory Nevada.
Yep.
There's Gigafactory Buffalo.
Yep. Okay, you're going to count that one?
Well, they call it a gigafactory.
Sure.
We'll call it a gigafactory.
Okay, sure.
There's Gigafactory Shanghai, Gigafactory Berlin, and now Giga Texas.
I mean, but they haven't even broken ground on that one yet.
We're going to say for all intents and purposes that that's due to happen any day now.
Whether it's in Tulsa or Texas, it's going to happen pretty soon.
Right.
That they're going to break ground. Right.
So we took those data points, we threw them into a graph real quick here, and here's what we've got. What does that look like to you?
That's an exponential curve right there.
There you go. Now that's only with 6 data points, but that still looks exponential. And that's with the Tesla that had trouble raising capital.
Right. For the majority of that graph there, it was everyone thought they were going to go out of business.
They had to raise capital by either going to China and saying, hey, Chinese banks, will you loan us money? Which they gladly did. Or going to the bond market and saying, will you give us money? Which they gladly did.
Right.
They weren't really able to turn on their stock tap because the price wasn't high enough.
So now with the ability to fund gigafactories easily, and let's spell this out. From the filings, it appears that Giga Texas for construction and equipment will cost around $1 billion. To raise the capital for a gigafactory, Tesla could issue just 910,000 shares.
Now, I just want to stop right there. Remember, we just talked a minute ago about the fact that since 2018, Tesla has issued 15 million shares, and no one has batted an eye.
That's true. No one has come out and said, they're diluting the stock. We can't do that. It's not fair. No one, you have barely heard a story about that when Tesla has done their capital raises.
Right. And that's normal. Companies issue more and more shares as they're growing.
So they've issued 15 million shares in the past 2 years, and no one has cared. If Tesla, at the prices today, were to issue 15 million shares, that would net them
over $15 billion.
Which would equal
15 gigafactories.
And Tesla currently has in cash $8 billion.
And I would argue that if Tesla said tomorrow that they were issuing, let's say, 1 million more shares so that they could build another gigafactory, investors would be like, great, that sounds like a great thing to do with your money.
Exactly, because I think especially if this next quarter is profitable, I think that Gigafactory Shanghai will have a lot to do with that fact. And so it will kind of prove that building gigafactories around the world is a good business model, in case you couldn't have figured that out just based on common sense.
Right. Building a gigafactory near your market means you don't have to put them on ships all the time.
Right. Tesla was able to actually lower the cost of the Model 3 by building it in the country that they were going to sell it, which therefore increased sales in that country. Go figure.
And I would argue that there's nothing other than physics stopping Tesla from building as many gigafactories as they need.
Well, I would say that there is one limiting factor.
Okay, what's that?
And that would be workforce. That would be talent. That would be people who are going to work for them. Now, the good news is with building gigafactories in different places, you are no longer just relying on the workforce pool in, say, San Francisco in the Bay Area. You are able to leverage, Germany and China and Texas or Tulsa or wherever you decide to, France, Russia, wherever you're going to decide to build your next gigafactory. But I think that with this comes the need for experienced people. And where are you going to find people who are experienced in the auto industry and who might be looking for a job? It's going to be from people who are working for the competition.
Yeah. I mean, if you are working for Ford or GM or Toyota today and you aren't already kind of brushing up your resume and getting it ready to send to Tesla, then you're either clueless and you have no idea what's going on in the world around you.
Which I would argue there are plenty of people who are happily ignorant to what we're talking about now. If you're looking down at the view number at the bottom of this episode and you're going, how is this not pretty much anyone who is going to be investing money on Earth? Yes, that is the limitation of the reach, of the understanding of where Tesla is in the world today.
Right. We're in a bubble right here, folks. You're watching this video right now. You're one of the few people people on Earth that gets what's going on. Most of the rest of the people of the world, just like we're talking about, until it gets on the S&P 500, they probably don't even know much about the stock. They probably don't know that it's one of the most valuable companies on Earth. In fact, try this tomorrow. When you're on your Zoom call with one of your friends, mention to them as a little conversation starter, hey, did you hear that Tesla is one of the most valuable companies on Earth? And they'll be like, what did you just say?
And then make them guess. But yeah, I mean,
it's
really,
worth more than Exxon.
It's worth more than Exxon. I mean,
what?
We're getting close to the point where we're going to need to take some victory laps, because if Tesla can keep this boulder rolling, and it is a boulder because it's not just like, oh, we ran a better automotive company, right? They're not just making a better mousetrap. They are building a thing that just changes what you change. It's a house for mice that takes them away. It's like this brilliant, it's like the Pied Piper. Like, it's completely new. No one is ever going to go back to owning a gas burning car.
Well, and I guess that's the thing. I mean, many people in the auto industry today must see this coming. I got to believe it. But if they don't, let this be your wake-up call.
Absolutely. And if you know anyone who's working in the auto industry, send this to them. I mean, let this just be like a little bit of a panic that should be going off. Sometimes, the panic that you feel is important.
Also, though, a good thing, because Tesla's going to need, like you said, they're going to need the workforce. So If you know what you're doing, you're an experienced person building factories or building cars, they're going to need your expertise.
Absolutely. But what an absolutely exciting time to be alive, that we might actually be able to get over our oil addiction, because if Tesla can pull this off, and we've seen it with people, as soon as you get in an electric car, you start to understand what your electrical grid does and what it means and what a kilowatt hour truly means. And you start to go, how can I get that number even lower? Because when you switch to EVs, you're going to start saving lots of money on your energy, because you're not going to have to buy gas.
Right.
And you're going to go, if I go solar, I'm going to get free energy from the sun every day beamed down from space. So maybe that's the switch I should make. And maybe the whole rest of the world should stop burning fossil fuels, because that doesn't make any sense, because it's killing all of us. Maybe we should switch to solar and wind and other clean sources of energy. Let's go that way. And now that I understand batteries, like, it is the education that we all need in this world. So, pumped for that. It's so exciting.
I mean, just a year ago, Tesla's at, $222 or something a share. Yeah. And we're telling people, like, I think it might be a good time to buy. Like, go back through our episodes if you want. It's all there.
Yeah.
And it does feel really good knowing that we were right.
Absolutely. Well, thank you so much for watching. Hit the like button. A lot of people say, oh, you hit the like button, I'll eat this sandwich made out of garbage. We're not going to do that. But the like button, here's what it's going to do. You click that like button, someone somewhere in the world is going to see this video on the recommendation, because that's how the YouTube algorithm works. Share this with a complete stranger by hitting that like button. And, let's make the world a better place together. Now you know.